you can teach on crossovers will help me confirm, what I think I'm seeing. Back testing is one thing, but that live market is a beast.
It is. It's funny. The live market is a beast, but what I wanted to go over as well, and I'm going to go over in detail, is the multiple time frame analysis. And when combining that with your crossovers, is going to make things really magical for you.
Oh, yes.
So
Let's go, Steve.
a lot of
Go,
time,
Steve, let's do it. Let's go.
a lot of times, one strategy actually leads into another. And you'll see when you can see the market, especially using momentum and saying, okay, this is what's happening. Now it's becoming weak. Now you can kind of look for these strategies based on where you see weakness in the market, where you see strength in the market, based off the momentum. So now your strategies even more and more confirmed before they even happen, because now you start to look for them based on the market's momentum and what's going on, especially when it comes to support and resistance, supply and demand zones. So when you see these things, reaching these levels, and then the market is, either getting weak at that level, or putting in, say you're going down and it's putting lower highs, and it's coming to the resistance and it's hitting. I mean, it's coming to support and it's hitting that support level, bang, time after time again. Especially on the bigger time frames, you can go down to your lower time frame and crush it and get in early, and then watch the whole move happen. I do want to show you some of that too. Um, Kevin did send me a nice message. We had a nice play yesterday, right? On SPX that went for about, I think it was well over 1,000%. I didn't get the whole thing. I jumped out early, but we literally watched it go down for 1,000%, and it was crazy. For those who were on the futures floor yesterday, I was going over it with SPX, but the futures went down just as much in that last. I think it was from like 3 o'clock on. Let me see from yeah, right around here. So let's go over that real quick. And Kevin, you want to hear the funny part is I was actually looking at SPY playing SPX. I seen it and it just made sense. So I ran with it. All right, so let's go to this 15 minute on this side here, and then I'll jump on a 2 minute here. And this is gonna.
Hey, Steve.
Are you
Hey,
sharing? Because you're not
oh,
sharing.
it would be nice if I did share my screen, right? Yeah,
Yeah.
yeah, yeah. Thank you guys. This is why I need you. I need you guys.
That's all right, Steve. I was like, man, is he about to share?
It's a it's about to go down. You guys ready? Because this was magical. Okay. All right
Hey,
now.
Steve, come on. Steve,
Hmm.
co-host me.
Yes, sir. Yes, sir.
Smooth.
Cool. Perfect. All right. I'm gonna bring this down just a little bit here. The stochastic I'm gonna bring down just a little bit. Okay. So we've been over quite a few strategies, right, guys? We've seen we went over divergences, the MACD, stochastic working together to get nice plays, and I want to go through kind of what was going on in my head when I actually came on and started trading in the afternoon, because I missed all the good stuff going on in here. But using previous history, and this is just on a 2 minute and a 15 minute, but just using the previous history of the day before I got on, I was able to see certain things that was possibly going to happen. Nothing, we don't never know what's exactly going to happen, but we can look at levels and areas where price has stopped and changed direction and say, okay, why did it do that? Well, if it does it again or it gets to this area, we have to look out, right? Because it didn't change direction there for no particular reason. It did it for a reason. Price was too high or price was too low, and people wanted to buy or sell in those areas. So we want to look at those areas and pay attention. All right, I'm not saying that to set what I'm about to say, set it up. One strategy that I haven't taught y'all yet is the trend reversal breakout. And I want to go over it. It's going to take me 30 seconds to go over it, but I'm going to show y'all.
Steve, quick question.
Yes, ma'am.
What color line is your 50?
My 50 is the blue line.
Okay, thank you.
All right, no problem. And matter of fact, for this, we're going to take the EMAs off. We'll put them back on in a second, but I'm going to take them off. Because I want to show y'all straight price action first before we go into, you know, using the cheat code, using the EMAs and everything else. And because price action starts everything, right? And just based off of price action, we can see some things. Okay. So with the trend reversal breakout, what usually happens is we're in a trend, right? We're going down. So we have a low, a higher low, a lower low, a higher low, and then we're supposed to get a lower low here to continue, right? Going on the downtrend. This pretty much was just about a double bottom, right? If you go to the T, it's basically just a small inch of a higher low. Well, what happens is when we break the previous lower high, that is when we are considering it to be a trend reversal break, right? And if you draw a trend line, right, coming down here, let me try to make that a little bit better, but we also break the trend, the downtrend, right? So we create the double bottom, or just a little bit of a higher low, and then we actually break this previous high, this lower high. Then we shoot up. Okay, so that is the trend reversal breakout. But you know, we looked at this as a nice bullish divergence. So we looked at this pretty much as like almost like a double bottom, and the MACD was not even the same level. It was way higher. The histogram was way higher, telling me that there's no buyers, there's no sellers down here at this point in time, right?
And that's a hammer right there, which is an actionable signal, which is a sign of reversal too.
Exactly. So we have multiple confirmation that this is, you know, getting weak to the downside. And this is on the 2 minute, guys, on this side, on this left side. On this right side, at the same level, don't we also notice that we are oversold? And at the same time, we have another bullish divergence on this time frame as well, which is a higher time frame, which is the 15 minute. We're oversold at this point in time. And with that being said, us being oversold on the bigger time frame and then showing some weakness to the downside on the lower time frame, that bullish divergence, the break of the downtrend, all of this is set up for this nice big juicy play to the upside, which was for me. I jumped into this one and I only got 13% of that contract ended up going over 250% to the upside, right? And this is not even where it gets fun yet. This is just one little situation, but that is the trend reversal breakout when we got these lower highs, lower lows, and then we create a higher low, and then we break that previous high, that lower high. That's when we have a possible break to the upside, okay? And that's what happened here. Now, tracking this, I was tracking this, and I'm looking to the left. And I'm looking to the left on the 15 minute and on the 2 minute, right? And this happened, this works on all the time frames. You know, you can check previous price and look at the areas to the left and see where there were, you know, pivots and consolidations. And we came right into an area where we had a previous nice pivot here, which was support, resistance right here, support right here. So I drew a box around this whole area before, as we were getting into it. And for a quick second, I thought we was going to break through and continue on to this area up here. That's when we were on the floor talking about a possible turnaround. Why are we seeing a possible turnaround? We get into an area where we've had some consolidation of support resistance before, and I look down at my stochastic, we're overbought in this area. I said, wow, okay. At the same time, we're touching overbought in this area as well. I said, okay, all right, let's take a look. Once this MACD turned over from coming out of overbought on a stochastic, and I followed the momentum, that's when we took a trade to the downside. And I was this was on SPY, and at this time it's 3:30. Now, what happens at about after 2 o'clock, 3 o'clock in the afternoon, the contracts on all the 0 DTE contracts become very cheap. The theta has killed all of the price action in the contracts on your option contracts to where they're almost worth little to nothing. So you get to buy these SPX contracts that used to be like $10, $8 for one contract, or $5 for, which is $500 per contract. Now you're getting it for like $1, $1.50, sometimes 70, 80 cents. And if you get a good move in the direction that you pick, those contracts can increase in value exponentially. That's one of the little tricks that people learn about the option contract at the end of the day. So, but at the same time, if you're wrong, you can lose the money fast as well. But you're buying it cheap. You're buying it real cheap, so you don't have to load up to make some good money. So in this particular case, I got a contract on SPX. I was watching the SPY, and I said, oh, wow, we're in this area. It's turning around. We're overbought, and the MACD is crossing over. I'm jumping in. So I jumped in right here. And we were touching overbought on the 15-minute. And as you can see how this candle is forming, we had a nice push up and then it pushed down. This is in itself is a reversal candle. What we call that, spinning top, Neo. So that being said, I jumped into the play. This trade, and I got out, I bought it for $1.10. And once it got to like 30%, I was like, I'm good. I'm gonna take my money and run. Well, I gotta teach y'all with this strategy, you can follow the MACD. As long as the MACD is pushing, you can stay in this trade, right? Now, this thing went from $1.10, and as it was going down, I'm looking at it. I got out the trade already, and I'm watching it, and I said, well, this is an area that we got to be concerned about too. This is a previous high, and we had a little consolidation. It might play around in this area. It said, I don't think so. It continued to push down. And as it was pushing down, it went from $1.10 to $5. Next thing I know, it was $8. That same contract that I bought playing to the downside. We had a couple of fair value gaps that we went over. It went and filled the fair value gap. By that time, it was like at $10, this contract. From $1.10, which is $110, to now worth over $1,000. Then it wouldn't stop. It kept going. I saw this thing get to $1,800. $18 from $1.10 to $18 in this one spell swoop. And we were on the futures floor going crazy because another gentleman had got into it right along with me, and he got a contract for 65 cents, and he watched it go to like $7, $8. So imagine paying $65 for a contract and watching it and end up making $700, $800. Or in my case, spending $110 and watching it turn into $1,800 or $1,700 or $1,500. Any way you look at it, well over 1,000%. And the fun part is some people do this every day, or almost every day. They wait to the end of the day, 3 o'clock, 2:30, and look and see what the market is giving. If there's a potential for a decent sized move in one direction or the other, based on the strategies that we learn here at Cheat Code, and they take advantage of it because you have that edge, and you can turn a little bit of money into a substantial amount of money. So that's how that worked yesterday, right? And you could probably did that on the way up as well. I just didn't play SPX, I played SPY on the way up. But yeah, that's how that worked. All right. So that was using just price action in itself. So now when you start to combine your EMAs now,
Hey, before we do the EMAs, and we just look at straight price action, coulda, shoulda, woulda, right? What would have been like the point where it says, just get in and just write it down? Like, because I'm like, maybe I should have taken the risk. Like, I mean, it just was moving so fast, but I don't know how to it's a continuation. So like, how would you play a continuation like that?
With a continuation, all right, cool, great question. So first we got the 6 or 17 crossover, right? So we already missed. Say you missed this play right here when the MACD crossed over, and you was actually with me. You're the one that called it first, if I remember correctly, about possibly taking a put.
Yeah.
Right in here, right? And I took it once the MACD crossed over for my confirmation, right? So let's say you missed that. You missed that. What happens after the stochastic gets overbought and then the MACD crosses over? The continuation is the crossover of the 6 and 17, or your 5 and 13, or your 8 and 21, whatever you choose to use, right? You can say, okay, once that crosses over, that's giving me more momentum to the downside. Let's say you missed that. Well, once the 6 and 17 crossed over, we had a small touch of this consolidation, about 2-3 candles of consolidation here, and then the breakdown where we had a red candle take out the green candle. That little green candle, that one took it out. You could have took that trade right there as well.
So basically, next time when we're on live and this happens, we're gonna get one for $20 or whatever, and that's like going to Chick-fil-A or whatever, and we just riding that shit down.
We can ride it down. Now, you know, and it's funny because, I mean, you know, you don't want to go as far as taking like a $20 one because it depends on how far the money it is. You want to stay, you know, with maybe about 2 to 3 deviations out of the money.
Oh no, but at that time it was like $345, $350. So you know that like the next contract was just what, $100 or $50, and then the next one after that was like probably like $10. You know what I mean? Because
yeah.
You know how it works with SPX, yeah.
Yeah, absolutely. As long as you stay within those deviations, you should be able to make some change if the move continues strongly. And then you have price levels, right? So I had this price level right here. I said, hey, if that cracks that previous high, you know, that level right there, you know, I could take it. I could take a trade. You can take a trade once it cracks the level, and you know, give yourself a little space above it. And then, and especially if you already got all your other confirmations, your MACD still push it down, your 6 and 17 cross. Okay, we crossed break this level, or we broke the 50 EMA to the downside. Okay, let's go. You know, these are all possibilities and probability. Everything is a probability. So once I have
and then the one last piece too on this one is that if we look to the right, if we were on the 15 minutes evening star, it's like why did it's like ding 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 ding. I feel like in addition, that's why that multi time frame continuity is just like so key, because if you look at it on a higher time frame, it just gave you, you know, that bearish pattern.
Absolutely.
Yeah. But anyhow.
Absolutely. And so, you know, when you get these things coming in, it's just when you sort of put all these things together, right? It just starts to you see it as like the big picture, right? And you're joining all of these little islands to make a beautiful continent, and all the little things that you learned here. You say, oh, that's happening. Now that's happening. And that's okay. Say less. Let's get it. You know, we had a nice uptrend going on here, right? Then we broke the trend here. Came up, created a lower high. Once we broke that previous low, let's go. To move to the downside.
Yeah, can I ask a quick question?
Yeah, of course.
I was just curious, what contract are you guys looking at, like 0 DTE on those, or
yes,
like
ma'am. Yes, ma'am. At the end of the day, there's no reason for me to hold a Monday contract, or if it's a Tuesday to hold a Wednesday contract, you know, unless I'm looking at maybe like the hourly time frame or the 4-hour time frame, and I'm looking at this for a strong continuation move to the next day. That would be the only reason I would take it. And I probably still wouldn't do it on spot on SPX, because SPX, the data is very, very high. So with this particular strategy, with SPX, 0 DTEs are going to be, you know, the most beneficial, because the data is being so high. You're looking for sharp moves. You're looking for those explosive moves to where the theta won't give you a problem. At the end of the day, theta isn't as bad either on SPX, because it's already worn out most of the day. So now you just try to get in, you're trying to get in, you're trying to get out. You're scalping these things. And this you have to have time for because, you know, you are scalping. So if you're at work and stuff, you're going to miss these kind of trades. It just is what it is.
Beautiful.
Yeah.
Yeah.
When you get them, whew, man, when you get these kind of moves, it's exciting. And, you know, if y'all shout out to Christy, because she actually teaches this strategy on how she does it. And, you know, she goes based on her levels. But she can hold a play for a whole day or a couple of hours and make it killing. And she's taught quite a few people here in Cheat Code how to do it. So definitely get with her on her SPX strategies. But this is just something that we caught yesterday that was just, we watched it turn, like it was crazy. You know, so the 6 and 17 crossover yesterday was amazing as well. Especially when they crossed over the 50 and the 200, then you have strong trends on multiple time frames. So I like to, when looking at these, right, because I do like to use my EMA, once I get price action lower than quite a few of these, so I have the 6 to 17 to 50, and then the purple is my simple moving average, 200. Once price gets below all four of them, then I know on multiple time frames, I'm going to the downside. I don't have to necessarily look. Because my 50 on my 2 minute is like my 17 on my 15 minute. So I know that price action is below the 17 on the 15 minute, then I know the 15 minute is going down. I still like to look at it, but that's what's happening. If it's under the 200s, possibly going down under the hourly as well, price action. So I know which side I should be playing on. Everybody knows I like to try to catch some of these reversals because I'm crazy, but for the majority, you know, we're going to be going down until we start to see some weakness. Now, as far as looking for weakness, that's when I go to my bigger time frame and start to see if we're oversold or overbought, or, you know, and look for patterns, candle patterns, or multiple candle patterns, you know, so, and see what's going on. All right, so any questions right now? 39:30.
Yo,
Right.
good morning, Steve. What's going on?
Good morning. Good morning. How you feeling, brother?
All right, good, good. Hey, can you go back over that? You said the EMAs on multiple time frames with your price actions underneath them. Which time frame are you looking at in particular to tell?
So
if
I'm
the,
looking at, yeah. So I mean, to tell you the truth, we can look at. All right. So I'm gonna show y'all some magic. I want to see some magic. Let's go. I'm gonna erase everything because I gotta redraw all my lines anyway. So let's do the EMA. Let's do the EMA multiple time frames. That's not what I wanted. What happened to my shucks? What happened to my candles? What did I do? Let's do this. Okay, cool. I wanted to do this. All right. So the indicator, and I just need this. The indicator that I use is the 10-in-1 MA, right? I found that on YouTube or Instagram or something. I said, oh, I like that one. Because I can use EMAs from different time frames, right? So what I want to do is here's what I'm gonna show you. I'm going to throw on, let me take off I want to take off, let's see, let me just use the 6 and 17. No, I'll use the 50 as well. Okay. I'm going to take off the candles for a second. So the OEC is EMA. Okay. So I'm on the 2-minute chart right now, right? So we see the
Wait, Steve, stop. How did you remove the candles?
Oh, up here in the settings, chart settings. Make sure you're under symbols.
Got it.
Bodies, borders, wicks.
Okay.
So I unchecked them.
Thank you.
No problem.
Sorry, I was head down making notes.
Nah, no problem. Okay, so I like to see I'm on a 2-minute chart, and I want to see, I use the 6, 17, and the 50. So I said, okay, well, I want to see where the 17 is on a 15-minute, right? Okay, cool. That's not what I wanted. The 17 on the 15 minute, the 17 on the 5 minute, the 15 on the 5 minute is There it goes. Okay, so that wiggly yellow line is my 5-minute chart, right? We're on the 2-minute chart, right? So you see how price is really close to that my 50 EMA, that 17 EMA from the 17 EMA from the 5-minute. You see how it's kind of like almost overlaying perfectly with my blue line, which is the 50 EMA on my 2-minute.
Yeah.
Mark,
I'm with
Mark,
you.
you see that? Right. So once I know that I'm under the 50, I'm on the 2-minute. If I'm under the 50, is pretty much telling me that I'm underneath the 17 on the 5-minute. Does that make sense?
Okay. Right.
Right. Now, let me see something else. And if I'm on the 5-minute, let me go to the 5-minute. If I'm correct, the 50 EMA from the 15-minute. I mean the 17 EMA, right? The 17 EMA from the 15-minute is my 50 EMA on the 5-minute. So knowing that, right?
Okay. So like your 50 EMA would be like your 200 on the 15-minute or something like that, from the 5-minute to 15. You saying every time you go up a time frame,
Right. So
the
knowing
next higher one.
right. So just by knowing that, right, I can say my 50 on my lower time frame is my 17 on a higher time frame. That being said, I know once I'm underneath the 50 on say this lower time frame, I don't have to necessarily look at the higher time frame. I know prices lower than that one on my for my 17. And this I know it's confusing to a lot of people. They like the 15, the 17, the 50, but by knowing that I can say because 6 and 17 are my primary EMAs, right? So once price is under those, I know we're pushing down on that particular time frame. But by using the 50 and the 200, those are showing me that if I'm underneath the 50, that means that on the higher time frame, price action is lower than my 17, which is my main time frame, my main EMA. Now, whether you use the 20 or the 21, it's the same concept. So using the 50, being under or above the 50, that tells me that I'm either higher or lower on a bigger time frame, which also gives me good. I'm in the right pattern. I'm in the right place. If I'm going down and we're under the 50, that means that we're under the 50 on a higher time frame. I mean, under the 17 on a higher time frame, and that's a good thing for me. That means we're going down. And I don't have to necessarily look at the higher time frame. You feel me? And the same concept for the 200, which is even a higher time frame, maybe the hourly. You know what I'm saying? So being underneath multiple EMAs.
I like this. This is a shortcut.
It's a shortcut. That's all it is. It's a shortcut. So, but some people don't like to have 4 or 5 EMAs. I don't have 5 EMAs on my chart, but some people don't like to have them. But I can look at it and tell you where the direction is overall just by looking at one chart. Whether it be
I mean, it was a shortcut. That means you don't have to toggle between a 15, 30-minute, 1 hour, because as long as you got the EMA set and you remember, you can always be on your lower time frame. It's like, you know what? It's here, boom, and then take your trade.
There you go.
That's what I meant, but yeah.
No, you're absolutely right. So, yeah, so that being said, you don't have to go through, like you said, toggle through all the time frames as much. And that's a little hack that I use, but I mean, I still like to look at the other time frames. If you see me, I'll still be scrolling through the other time frames. But
Steve, in that configuration, your 200 moving average was set to simple moving average. Was that intentional?
Yes. I do that because that's what
Okay.
institutions use, the 200 SMA. They use a lot of SMAs. I like the EMAs because, with the lower time frame, it moves faster with price action. But that 200 SMA is standard. I just need to know where price is compared to that 200 SMA. Also, if we're above or below it, like I said, that bigger time frame confluence as well. So that being said, it just gives us more strength because if we're below multiple EMAs, then that means that the time frames are congruent in that direction. You know, so you'll see that like once that's how you get these big moves. That's why the 50 is so important to me. And sometimes I turn it off. Once I know where we're above the 50, we'll have to turn it back off, you know. But just to lighten up my chart. But those I was on a 2 minute yesterday. Them EMA crossovers, they are the truth though. I ain't gonna say no lie. They are the truth. What y'all want to go over now? We got 20 minutes, and I do gotta set up these charts, but you already saw me how I set up my charts and everything else, right? Set up my support and resistances. I think I did that last week.
I got another question for you. Did you record last week? Because I missed it. So
Yeah.
see if I can watch that.
Absolutely. Go to my search my name on the community line, and once you scroll down, you should see it.
Okay. All right.
It should take you to my page on my post, and I don't post like a lot of regular stuff, so most of it is going to be like these strategy sessions and such. And I think I have about 3 or 4 of them up.
All right.
Hi,
Thank
good
you.
morning, Steve.
Good morning.
doing?
I'm good. How you feeling? Hey,
I'm
Carol.
doing pretty good. Hi, it's just a rainy day. I'm doing good.
That's what's up.
I have a question. The question is, are you saying that if you're 6 and 7, if you're under 2 minutes, right, and you're 6 and 17 is under your 50, under 2 minutes, that means that on the higher time frame, your 6 and 17 is under?
The price action is underneath, like say, so under the 6 and 17 on the 2 minute, right? As long as we're below the 50 EMA, on the higher time frame, price action is underneath the 17 on that time frame. I'll show it to you right now. So let's go to 1 2 minute. I'm gonna go to the 5 minute. That's my higher time frame from here. So the 2 and the 5, even though it's close, it's still far enough. Let's go. So you see where my marker is right here, right?
Yes.
Right. So the 17 on the right is the 17 on the right is right there where right where the 50 is on the left, or right between. So as you can see, as long as we are below the 50 on the left-hand side, on the 2 minute, we're below my 17 on the right. And if price action is below the 17, then we're moving down, correct?
Yes.
Cool. So as long as we are below the 50 on the left-hand side, then I know that we're below the 17 on the right-hand side, which is my bigger time frame. And look at the 200, right? The 200 is the purple right here. You see how congruent it is with the 50 on the 5 minute? So that means if we're under the 200, that means we're under the 50 on the bigger time, which is even more confluence to the downside.
Okay.
You know.
Okay, I guess I wrote it down wrong. Okay, now I got it.
Oh, no, it's all good. It's all good. You know, and you know, of course, we're gonna have price action. Price action is number one. Price action is gonna do what it wants to do, and it can get above these EMAs, go back down. It can do whatever it wants to act crazy. But when you start to have flow of price action, man, you might as well just stay with that flow until these EMAs cross back over.
So I could just basically stay under 2 minutes then, instead of going back to the.
Yeah, you can. I still look at multiple time frames, but you can, knowing what the majority of it is saying.
But usually I have both screen up, the 2 and the 5.
Me too.
Yeah.
It's just a little bit of a hack. It's just a little bit of a hack.
Okay, thanks.
How have you guys?
Yeah, the only thing I'd say about the smaller time frames is that you can get faked out easy. So that's why you have to look at the bigger time frame to make you still stay
Yeah, I mean, yeah, absolutely, absolutely. I still like to look at the bigger
Yeah.
time frames. I mean, I just look to look at them. You know, I love charts, so I'm looking at them just because. And I also want to see one thing I can't tell is if the higher time frame is either overbought or oversold. So I still gotta look at it for that. But overall, I'm looking, and when I do look at the lower time frames, and I start to see, you know, the divergences and stuff. That's when I do go down to my upper level time frames to see where we at as far as overbought, oversold, and because I usually have my charts already set out as far as my support and resistance, supply and demand zones, I'll also know by that as well because those are for me quite often based off of a higher time frame. Matter of fact, that's what I'm gonna do right now. Any other questions before I set up my chart? So I'm gonna go straight into taking everything off until I make a chart and setting my support and resistance levels.
I have a question.
What's going on?
Have you ever thought about using like the clouds? Like the clouds from the 15 minutes, like on the 2 or 3 minute scalping, so it help you stay in a trade longer?
You can from the cheat code algo.
I mean, yeah, I don't use that necessarily, but I have clouds set up. But I like the idea of mixing what you
Okay.
did with using the clouds, because when you're looking at the 15 minute, it plays out different with certain clouds
Mm-hmm.
versus when you have them on the chart that you're looking at now, and it'll
Okay.
help you stay in a trade because
Okay.
trading on a 15 minute looks a lot different than trading on a 5 minute to me, anyways.
Mm-hmm. Yeah.
But so
Yeah. I hear you.
so
So it helps.
can you do that? Can you set the clouds up to be on different time frames and use them on the same chart too?
Well, the cheat code we got the algo where we can use the clouds, and they got the higher cloud and the lower cloud, so we can do that. I don't do it
Okay.
often, but you can. Show higher cloud, and we're gonna take auto off, and you can do like I said, the 15 minute is the higher cloud, and we'll show the lower cloud. Okay, okay. I want to show the lower cloud. I want to show the higher cloud, and then I gotta take off this cloud type if I'm correct. There's something not right. Hold on. Let me take off these EMAs. Let's get these clouds going. It's been a while since I used the cloud. Cloud style, background. There it goes. And hopefully I got it right. Auto custom. Am I doing that right? Custom lower, custom higher, show current cloud. Do I need to show the current cloud? Okay. So if I'm on a 2 minute and it's showing me the higher cloud. So like you said, you can stay underneath the higher cloud. The higher cloud is a 15 minute, right?
Right.
Let's see if I got it. I got
So I
that right.
think was it yesterday? Might have been the day. Oh, was it yesterday? Might have been the day before yesterday. And how the cloud, like the 15 minute was just steady going down, but it was more choppy on the smaller ones. And you could have just stayed in that trade by going by the clouds and not jumping out, thinking it was reversing, but it really wasn't.
Because the higher cloud was giving you the bigger time frame, is giving you the
Right, because it was giving you still red
right.
candles, but the smaller ones kept jumping.
This
So I think
yeah,
that's it right there. That's yesterday, right? How do you? I'm still trying to learn.
yeah. This is all yesterday. This is all yesterday's price action.
No, not yesterday. Thursday. Let's go with Thursday. Thursday was the big drop, right? Yesterday was more chop.
Yeah, the Thursday was yesterday was this was a nice drop yesterday too, but Thursday had a nice
All day drop, right? Like from all afternoon
yeah,
drop.
yeah. Wednesday, this is Thursday, all afternoon. Yeah, this is Thursday from 2 o'clock.
Yeah, you see, yeah, because if you'd have stayed in that red cloud, you would have just stayed in that trade all day.
From 2 o'clock.
Yeah, from 2 o'clock to 3. If you'd have had the red cloud on, you would have just seen that to stay in.
As long as the cloud, yeah, that's something that Quay teaches, but he teaches it on the other cloud too. I forget which other cloud, the regular cloud.
But I didn't know you that's interesting. I like that idea. All right,
Mm-hmm.
thank you for explaining it to me.
Oh, no doubt. No doubt. Thank you for bringing it up. Because what you could do is, I'm just thinking about like some Oliver Velez vibes, right? Where if you stay in this cloud, you're on the 2 minute, right? And this is the higher time frame cloud, which is the 15 minute. That's we're using it as the 15 minutes. So the 15-minute cloud is green, and you're on the 2 minute. You can take out like any green, take out red, and it's possibly gonna pan out for you to make you some money. But as long as you're staying in the green, you can stay in the green until it turns red, and it should be all right. And vice versa. Not
How
bad.
you know? How
Mhm.
you know it's the 15 minutes cloud when you're on the 2 minutes?
Oh, as I set it up. I set it up on the algo. So on the algo, I set it up for a show higher cloud, and I put the custom higher cloud as a 15-minute.
Okay, okay. So the green and the red cloud is 15 minutes time frame.
Yes, ma'am. Yes, ma'am.
Okay, so what if you go on the 1 minute? Will it still be the 15 minutes?
Mm-hmm.
Okay, okay. I got you. So no matter
Sure.
what
Yep.
time frame you want, it will be 15.
Because I have it in my settings. Yeah, show a higher cloud. So you got the 15-minute higher cloud,
And the reason why you put 15 is because you want to know.
But
when-
that's a number she gave me, so I had to use it. That's like, okay,
Oh,
yeah. So like on this,
so when you're on the 2 minutes and you have it on the 15, that means that if it's going down, that means that the 15 minutes is going down. That's why you do it.
yeah, this is actually
Okay, got
this
you.
is actually easier than having the EMAs on, you know, and looking in to see if it's under the 50. You know, you can just say, okay, well, I got the red cloud saying that we're bearish on the 15-minute. I'm on the 2 minute. So which way should I be playing? At the downside.
Yes,
You know what I mean?
yes. Yeah, okay, because I always wondered how to use those clouds. That's why I never use them. Now I know. Thank you.
Oh, sure, man. Hey, thanks, Erica. I appreciate you. So yeah.
Steve, I noticed that for your 16, you have it on the LMA
On my 16.
for the 10 and 1.
Well, I got it on the LMA.
Oh, okay.
Oh, no,
Okay.
yeah.
Okay.
I said that. I was going to ask you what the LMA was because I was like, I ain't never heard of that one.
I didn't know. It's just it's my screenshot that's too blurry. That's all.
Okay, no doubt. You good. Yeah, I got the EMAs on. I was like, LMA. You want to teach me something new. Ooh. Okay.
No, this is me who can't see. I need my glasses.
Nah, it's all good. It is all good. But yeah, so looking at that 15 minute, that's the higher cloud is saying, hey, but it's pretty good. It's rolling with my 17 EMA pretty good. So and my 50. Yeah, so the clouds, yeah. So if you don't like lines, you can definitely use the clouds, and that'll help you as well. Because I'm comparing it to my EMAs, and they're just pretty much in the same alignment, which is fantastic. You know, and you choose these strategies, all these strategies that we go over. And if you're watching this on YouTube, you know, there's going to be a playlist of, you know, strategy sessions that I've done with the team, and you can go back and look at those and pick whatever strategy you like. There's a couple different ones. They all work. You know, you just got to stay consistent and trust the process with them. You guys confirm that these strategies that we've been going over, that they work pretty well? Y'all gotta answer. So that made me look good on YouTube.
Yes, sir. For sure,
Repeat
man.
that?
For sure. They work.
Absolutely.
No, man, just messing around. But I mean, no, but they do. I mean, you know,
Absolutely.
we've been doing this. I think this 1 week we can show you every especially on the lower time frames, every strategy that we went over has panned out in some form of fashion. The MACD crossover, the stochastic with being overbought, then the MACD crossover, boom, money, back and forth. Especially when it comes to ranging markets, I love them for that. Bearish divergences have been working out real nice, especially when you also see them on a higher time frame. Now, like I said, but when you, especially, we have 5 minutes, especially when we go to the higher time frames and we see these things getting into overbought or oversold situations on the stochastic, that's when we can look like on the lower time frames, having them side by side. I'm just got to spy up, but this is for any chart, right? If I'm on a 2 minute, I like to look at the 10 and the 15, right? And we start to see these things getting into overbought ranges, like in here. We get into previous price action, right? We get into previous price action. This is a nice consolidation area, and we're pushed up on the 15 minute right into this area. So first and foremost, we're looking at that as price action. Like, okay, this is the area of consolidation, right? So let's throw a box around that. And this is the kind of stuff that I really want you guys to pay attention to, because like I said, price action is everything, right? We've seen that we had this price action prior, right? And this is yesterday at 11:15, and we pushed up pretty good. And we can say, oh man, we're gonna go break through this, and it can break through it. But once we get to it, we have to be careful, right? But that's when we start to look at, okay, we're overbought in this area where it used to be some form of support, right? There was support right here. Now it became resistance. It stopped here for a reason for a second and consolidated here for a reason before it broke down. Now we're back in this range. Let's take a look and see what's going on with our oscillators and such. So the Stochastic RSI was overbought, right? It could be used as momentum and continue to push, but that's why we look at that MACD. But at the same time, once we get into overbought, I'm immediately looking down to my lower time frame, which over here is like my 2 minute or my 5 minute, right? And I'm looking to see that confluence, right? What's going on over here on the lower time frame? We're overbought on this one. And what's funny is we're getting into overbought on the higher time frame as well, right? When I drop down to my 2 minute and I see a bearish divergence on the histograms on this one, right? Which is showing me that we're pushing up, but the buyers aren't as strong as they were here. Now we got to here, the buyers are kind of weakening out. Okay, that's cool. We're overbought and the buyers are weakening out. That's a good sign that we want to possibly push back down. Once that MACD cross back over to the downside, showing a change of momentum, we can enter our trade and start making some money. Whether you make a little bit or a lot of it, you're going to be in some form of profit. It's up to you to lock it in. I like the next level of support, but you're looking for a bigger move to the downside, especially with the bigger time frame looking like it wants to kind of possibly turn over. You can try to hold it for a bigger move. That's why another reason I like to look at the bigger time frames, because sometimes I'm looking for that bigger move, and the lower time frames allow me to get in early, right? What I saw on that 2 minute at that same time frame, I think I saw a couple of bearish divergences here. So as price action was getting higher here, the MACD was getting lower, which set off this nice drop right here. And then I've still got I still got 15 minute up as well. We see price action staying in the box, but it can't push higher. Once again, it tried to come down. It had a little bit of a break, came back up, and it didn't want any smoke. It got into overbought again, and then it came right on down. And then what happened here? Price action didn't even get back to up here before it got back to overbought. And what happened? Boom. Game over. Night. And speaking of night, that's all the time I got for today. Jeff is about to get started
Steve.
with hey, what's going on?
Hi, when you stop the recording, I want to ask you a question.
Okay, not a problem. Oh my gosh, I didn't even realize the chats. Oh, okay. Cool. Corey, did we get your did I get the cloud? Are you good on the cloud? The cloud set up?
I don't think you got to it.
I didn't get to it? All right. You want to see the cloud set up again? I'll show it to you real quick. So on the algo, hit the settings.
Yeah, thanks.
Hit the settings here. You want to go down to auto custom time frames. show higher cloud. Now, I put the custom higher cloud on a 15-minute. You can have the show current cloud as well, but if you just want to kind of ease up your chart, you can just show the higher cloud. And when you get up here, the cloud style is background. You can do line too, but if you want the clouds, just hit background. And this cloud type, make sure that's off, because if you have the cloud type on, you gotta, it's gonna show you the EMA cloud. So you gotta take that one off to have the higher time frame cloud on. Does that make sense?
Yeah, I think so.
All right, cool. Well, just let me know if you have any problems. You can hit me in the community anytime. Hey Mac, just go to my name on the community and click on one of those links. It'll take you to my YouTube channel. It's Trade Ideas with Screener Steve.
Can I have you just do one quick thing? Can you pull up the 10 and 1, the 10 and 1 indicator real please?
Yes, ma'am.
Pull it up in the indicators so we can see which one it is.
Oh, okay. It's called 10 in 1 Different Moving Averages.
All right, thank you.
By Himanshu.
Thank you.
Nah, no problem, no problem. All right. It is time to get our mind set on with Brother Jeff, another phenomenal trader, and he's gonna get you guys right and get us all right with the mindset of the week. All right, so I don't know if he started that class already.
Are you ready?
Am I ready? Oh, let me start the recording. Everybody on YouTube, join the cheat code. It's free. Join the cheat code community, cheatcode.com. You can get the app at the cheatcode.com on the Play Store, Apple Play Store, and the Android Play Store. So see y'all on the next one. Talk to y'all later.
Steve, I think somebody had a question once you stopped the recording.